If there's one stock I've been bullish on for quite a long time, I use the services as well almost on a daily basis, it has to be this one. I've been bullish on this stock for a long time. These videos probably don't even get that many views at all, and I cover this stock quite a lot, and that's Netflix. I've been covering Netflix for a long time, and actually 4 years ago, I made this video, Netflix stock to $1,000. This was 4 years ago, only 2,800 people watched it. And at the time of making this video pre-market, Netflix stock is up 15.46% to over $1,000. So yeah, what a ride it has been. You can check my videos on Netflix even when the stock was down a lot after Bill Ackman bought and sold. I kept on being bullish on Netflix because it just didn't make much sense, right? All the hate that Netflix got. Oh, I'm unsubscribing to Netflix. Netflix is dead, blah, blah, blah. Oh, actually on the Netflix is dead aspect, I have to say that vidIQ's latest video could not have been timed better. Netflix is dead. This is their video from 1 day ago. And as I'll show you in this video, Netflix is far from dead. Netflix, the business, is thriving. It was another incredible quarter by the company. Now, do I regret not buying it? For sure. It could have been a 5x for me by now. Why did I not buy it? Well, probably because I bought loads of other stuff. And like I said in previous portfolio videos, you cannot catch them all. Because there are certain times where, yes, a lot of great companies are trading at attractive prices. Whether it's Meta at $90, Google at $90, Amazon, yeah, all three of them were trading at around the same prices. So you have to pick and choose. Yes, you live and you learn because some of them will go up faster than the others. That's also very important. When things go down, when we go into a bear market, for example, lots of stocks will be down 20, 30, 40, maybe even 50, 60%. And then it's very important to pick out the great companies. Because even these smaller companies, and we've seen that especially in 2021, right? 2021, 2022. Lots of these small companies took a major hit. So logically, we would think, oh, okay, a company that's now worth $5 billion, $10 billion might rebound faster than a company that's worth $100, $500 billion, right? But no, what we've seen is it doesn't matter. You're worth $500 billion or you're worth $5 billion. What matters is that your business is doing better. Because the company that was $500 billion worth has rebounded much quicker than the company that's worth $5 billion or $10 billion. And that's why we have seen stocks like Netflix, stocks like Meta, Nvidia. Okay, Nvidia, maybe that's something special, but Meta and Netflix, right? Sentiment was incredibly bad for those companies, right? They were losing subscribers. Meta free cash flow was thrown out of the window, metaverse and all of that. Bad sentiment. But what happened when they refocused? Well, the business went up and went up super fast, much faster than all of the smaller players, which are still probably struggling today. So that's basically the message here. Now we're going to go and look at what happened with Netflix last quarter. You probably already know a little bit, but lend me your time for the next couple of minutes and I'll explain what happened last quarter. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So what we have here is again a great overview by Consensus Guru. So for the quarter, a beat across the board, as you can see. For Q1, a miss across the board, small misses for revenue. Operating margin was a miss of 148 basis points. And then for the full year or fiscal year 2025, revenue and operating margin both small beats. Now for the quarter specifically, we can see here revenue increased 16% year over year. We've also seen that there was a huge increase in global streaming paid net addition, 18.91 million. Now, okay, we don't know how many of those will still stay with Netflix because probably a lot of them did join because of the Mike Tyson, Jake Paul boxing match, maybe even for the NFL games and stuff like that. So, okay, we'll see. But during the earnings call, they did say that churn was around the same level as they're used to. As for guidance for 2025, they expect revenue to come in between $43.5 and $44.5 billion, which is $500 million higher than their prior range. Now, they did say the following, that since the forecast they published with their Q3 2024 results, the appreciation of the US dollar versus most currencies has negatively impacted their 2025 revenue forecast by around $1 billion net of hedging. This FX impact is included in their updated guidance. It's also important to note that beginning next quarter, they'll no longer report paid memberships and are on a regular quarterly basis. They will continue to announce paid memberships as they cross key milestones. Starting with their Q2 2025 results, they'll publish the biannual engagement report, which accounts for 99% of all viewing on Netflix in tandem with their Q2 and Q4 earnings results. This is a strategic choice that they're making because maybe the huge increase that we've seen in Q4 is going to impact Q1, and so now we are not going to see that directly. But yeah, I don't know. This is a strategic thing. It doesn't really change that much because the focus should be on whether or not revenue is going up, free cash flow is going up, earnings are going up, and stuff like that. With regards to monetization, they talked here about the ads plan that allows them to offer lower price points for customers, which continues to be quite popular. In Q4, it accounted for over 55% of their signups in their ads countries, and membership in the ads plan grew nearly 30% quarter over quarter. A top priority in 2025 is to improve our offering for advertisers so that we can substantially grow our advertising. I mean, if you go back to my older videos, I've talked about the fact that, well, Netflix will eventually go into live television, right? Live sports and all of that, because it was a no-brainer, and that's how you attract way more subscribers. More importantly, you make sure that they stay on the platform. Secondly, of course, advertising. Everybody goes into advertising. It's also a no-brainer. Make sure you attract those that cannot pay the premium price. And you also make money because, well, advertising. So no-brainer. And then the gaming side of things, whether, I don't know, I never really played the game through Netflix platform, but okay, apparently some of the games are quite popular. They shared some information with regards to specific events, and this is basically the way that they're going to continue. So in Q4, they had the Jake Paul-Mike Tyson boxing match, which became the most streamed sporting event ever. Wasn't that interesting, to be honest, but okay. They followed that up with the NFL on Christmas Day, which were the two most streamed NFL games in history. That's a bit more interesting because, well, again, it's sports, it's NFL, it's quite popular and quite big. Hopefully they can continue to do that. Building on the momentum, they recently announced that they've secured the US rights for FIFA's Women's World Cup in 2027 and 2031. To be honest, when I read that, I was quite surprised. But then again, it's the Women's World Cup. I don't think it's that expensive compared to, of course, the Men's World Cup or maybe NBA or stuff like, or even Premier League or Champions League licensing. But it's a good start. And this is the important part here. We're not focusing on acquiring rights to large regular season sports packages. Rather, our live strategy is all about delivering can't-miss special event programming. This includes not only sports, but also exciting comedy specials like Chris Rock, the roast of Tom Brady, etc., etc. Their aim is to deliver big, memorable moments to their members, although their live programming will likely be a small percentage of their total view hours and content expense. They think the eventized nature will result in outsized value, both our members and our business, and I agree. Because if you can make sure that you have not that many live events, but a couple, let's say a handful throughout the year that are huge events, it will incentivize people to just keep on paying for that membership. With regards to buybacks, they said that in 2024, they repurchased 9.9 million shares for $6.2 billion, and that they've used $12.9 billion to repurchase shares since the program's inception. The board has approved an incremental $15 billion for the program, which brings the total buyback authorization to $17.1 billion. For 2025, assuming no material swings in FX, they expect to generate free cash flow of about $8 billion, which I believe is a bit lower than what the analysts were expecting. From what I've seen on FinChat and stuff like that, I think it would be closer to $8.8 billion. Their forecast assumes cash content spend of roughly $18 billion and an estimated $800 million in cash outflows related to the timing of certain direct and indirect tax deposits. And so, all in all, zooming out, this is basically what we're seeing here with Netflix. Where exactly do you see that Netflix is dying? Because I can't see that. If we look at this quarter and the year-over-year growth for UCAN revenue, that's up 14.9%. EMA is up 18.1% year over year, LATAM up 6.4%, and APAC is up 25.9% year over year. We can also see that last quarter was a record quarter when you look at paid net membership additions. I mean, look at that huge jump here. This is the power of these very specific and well-timed events. Of course, we might probably see a drop. Well, we will probably not know directly that there is a drop. But as long as you can keep having those events throughout the year, I think you are going to have, well, overall, an increase and a steady increase in new paying subscribers. All in all, Netflix has now over 300 million members on its platform and growing. And so here again, Netflix shows the power of a well-run streaming business. This should be encouraging to the likes of Disney with Disney Plus, which I'm now a shareholder of. Yes, I did go with Disney. I know, surprise, surprise. But they show it time and time again. They also have pricing power because I believe they are increasing the price yet again, a tiny bit. But if they're doing that, then they probably know that, well, we added more value, and so we know that we can ask a little bit more, and we also know that the subscribers will keep on paying a little bit more for the service that we provide. This is pricing power. This again shows that Netflix is far from dying, and Netflix growth is just continuing to be a beautiful thing to see. But the focus here is basically on, yes, streaming can be a highly profitable business if executed correctly. So yeah, do I regret not buying Netflix after Bill Ackman sold? 100%. But yeah, you live and you learn. I think with my move with Disney, I think that's going to pay off quite well. Of course, Disney also has the parks and other stuff, so it's not apples to apples, but there is a small apple in that fruit basket. So there is that. Anyways, if you own Netflix, well, congratulations. And if not, well, I guess you can always binge watch a new TV show, right? So that's all I've got for you right now. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.